This week was one of the toughest trading weeks I've seen in a while. A week where focus, precision, and speed mattered more than anything. If you waited too long for confirmations, you were already late to the move. But despite all that, I managed to lock in some really solid profits. Let me break it all down for you, day by day, so you can see exactly how I approached the markets, what worked and what didn't. Stick around till the end because I've got some key lessons you don't want to miss. Monday, August 18th. On Monday, I didn't take a single trade. There wasn't much news driving the markets, and the price action was pure consolidation. Instead, I used the time to study how price was reacting to the new week opening gap. Every 1 hour candle was giving me a lesson in patience. No clear setups, no real movement, so I passed. And honestly, sometimes the best trade is no trade. Tuesday, August 19th, 2025. This was one of those days where patience, understanding, liquidity, and trusting the process really paid off. From the daily time frame, my bias was already bearish. Why? Because the market had already taken all the buy-side liquidity and started to retrace filling imbalances. Always remember this. The market only moves for two reasons: to hunt liquidity and to balance imbalances. With that framework in mind, I was naturally leaning toward bearish price action. On top of that, there were macroeconomic conditions confirming my bias. Big AI and tech names like Nvidia and Palantir sold off hard. Investors were cautious ahead of Fed Chair Powell's Jackson Hole speech, and European defense stocks corrected after being heavily overvalued. All of this created the perfect storm for bearish pressure across the markets. On my chart, I had a very clear sell-side liquidity pool marked. Then dropping to lower time frames, I watched the market take a minor sell-side liquidity grab, which created a beautiful inversion fair value gap and a market structure shift. Now this is where one of my edges comes into play, the ICT 2022 model. I measured my optimal trade entry, OTE, from the liquidity sweep down to the low of the market structure shift. And guess what? The 62% retracement of the OTE landed perfectly inside the inversion fair value gap. That's as clean as it gets. So I executed with confidence. I placed my sell limit order right at the inversion fair value gap. My stop loss went just above the liquidity sweep, and my take profit was set at the 200% extension of the OTE. The market retrace tapped me in beautifully, and right at 9:30 a.m. New York time, the market absolutely melted. It dropped aggressively and hit my target clean. No hesitation, no chop, just a straight shot into profit. This was hands down one of my best trades of the week. Simple, clean, and completely in line with ICT principles. Days like this remind us why journaling, backtesting, and following your process are so important. So that's my Tuesday breakdown. Liquidity taken, imbalances filled, confluence with macro events, and a picture-perfect ICT setup executed with precision. Wednesday, August 20. Going into Wednesday, I still had a bearish bias. But after Tuesday's aggressive sell-off, I needed to be precise. During Asia and London, price pushed higher into a 1 hour fair value gap. The body respected the consequence encroachment, and on lower time frames, we took out London session highs, buy-side liquidity. That gave me my signal. Once a market structure shift formed, I measured my OTE, placed my sell limit at the 62% retracement stop above the day's high TP at the 200%. As expected, New York Open delivered. Price tagged me in and went straight to my target. Clean, precise, done for the day. Thursday, August 24th, Thursday was a grind. I was hunting longs after seeing a liquidity pool form, but the New York AM session gave me nothing. Later in the PM session, price created a fair value gap and a market structure shift. I measured my OTE, placed a buy, but the trade couldn't hold. Price tagged me in, then reversed and stopped me at break even. Not a loss, just a scratch day. Friday, August 26th. Friday, wow, if I were a swing trader with wider stops, I'd be sitting on a monster TGF setup. The market cleared liquidity beautifully and gave a textbook long opportunity. I had a 1 hour fair value gap marked, and price reacted just like I expected. But here's the catch. It moved too fast. By the time I tried to execute, price was already gone, ripping higher and leaving me behind. No entries, no trades. And yeah, I was frustrated to miss that one. But here's the lesson sometimes. The best setups won't give you time to act, and that's okay. Protect your process. So that was my week. A tough market, but filled with lessons. Monday, no trade. Tuesday and Wednesday, clean high probability winners Thursday. Break even Friday. Missed the move. That's the reality of trading. It's not about winning every single day. It's about executing your edge with discipline, protecting capital, and learning from every session. If you enjoyed this breakdown and want to see more real-time ICT concepts applied to the markets, hit that like button, subscribe immediately, and stay tuned. Crazy content is coming your way.